Good evening. Welcome in. I'm Daniel Martin with the Wehrly Group. This is Patrick Wehrly. We're doing a little webinar tonight to talk to y'all about the Coronavirus CARES Act. We're going to kind of summarize it for you. We'll just kind of kick it started tonight, Patrick, with the direct payments. When should they be expecting those payments, and how's that going to come to them?
Well, that's a good question. One of the reasons we're doing the seminar this evening is that we get a lot of people are calling and asking us the same questions. Might be easier to explain it one time to everybody rather than explain it 150 times to a lot of people. Before I answer the question, from 30,000 feet, a lot of our clients are airline pilots, and so we like that expression, from 30,000 feet. Please know that your retirement, this is an excellent, kind of a one-time, we think, once-in-a-lifetime opportunity to change gears. This is an opportunity for you to change the direction of your retirement into a tax-free retirement.
Amen.
Let's all keep in mind that the $2 trillion that just arrived from somewhere for this stimulus on top of the money we already owe. So we're concerned about income taxes, your income taxes, being much higher in the future. And our particular firm deals with that. That's our specialty. So again, we're an essential company. Nobody's going to separate you from paying your taxes to the government, certainly not the government. So we are open for regular business. We are, of course, observing normal social distancing parameters at this time. But again, this is a chance for everything in your life and in your family's life to change. One other real quick thing. If your income is going to go down dramatically this year, that's a big deal. There's huge tax ramifications that are going to be caused there. You need to be talking to somebody people that are tax planners that can understand what $40, $50, $60, $70,000 less money this year could mean to your retirement and maybe doors that could open that have never been opened before. That on top of the coronavirus, this could make a big difference for you. You're going to want to get in touch with us. Now, to answer the question, the checks are supposed to go out. They're supposed to go out on April 15th, but the IRS can only send out 5 million checks a month. So it could be months and months and months before that actually happens. You may want to contact us very quickly. We expect to be in possession of a website that we can give you and help you and walk you through where you can have your funds sent to you electronically. And that might be better and quicker and faster for everyone. Here's something most people don't know from kind of the comments we're getting is this is not just free money. This money, which by the way is again $1,200 for each taxpayer, $500 for each child below the age of 17, that money is going to be basically adjudicated. It's going to be settled in your income tax return for 2020. By the way, for those of you out there that are a little late, maybe you just realize, hey, I never got my 19, my 18, or my 17. We do a lot of business with late filing in our tax firm. We're a full-service firm, so you may want to contact us for that as well. So again, these are extra funds. Hopefully, God willing, you're working and making money and all your bills are paid, and yet this money is going to arrive on your doorstep. Wouldn't this be a good time to start a tax-free retirement program with money that's been given to you in this fashion? The answer is yes, it would. So once again, don't waste this. This is an opportunity to change everything, and we want to make sure that happens. By the way, it could be possible in the filing of your tax return that a large percentage of this money will have to be paid back, and that's something we'd want to talk about once we were able to study your 2018 or 2019.
Great, great information. Again, if you're just now joining us, we're going over the Coronavirus Stimulus Act. We're going to kind of summarize it for you tonight. So we've got a lot of information in a short time. We're going to try to cover it. Next, they talked about the RMDs being suspended. How's that going to affect our clients, and what do they need to know about that?
Okay, we hear three things when we're talking to people that are 70 and a half and have to begin their required minimum distribution. Number one, Patrick, Daniel, I don't want the money. Number two, I don't need the money. And number three, I don't want to pay taxes on the money. And our common response is, too bad. You have to take the money out and you got to pay taxes on it. Good news. A lot of people now are calling, well, gee, Patrick, Daniel, looks like I don't have to take my $20, my $30, my $40,000 out this year, so I'm not going to do it. Whoa, hang on. You need a tax expert. You need someone that's Definitely. A tax planner. You may still want to take that money out. I mean, just think about it. It's not an automatic anything. If you don't take the $40,000 out, guess what's going to happen? Over the years, that money that you didn't withdraw is going to be $50,000,
You can make
$60,000.
more taxes.
Yeah, exactly, at whatever tax rate that your friends in Washington have cooked up by then. So be careful. You may still want to take the money out. There's very interesting opportunities for what you could do with that money based on what's happening right now. I might mention this, and this is kind of startling, and it's off subject, but we have clients in our firm, their retirement accounts have gone up every single day this year, and they're tax-free. And if your accounts haven't done that well, you may want to talk to us about the combination of making a required minimum distribution and maybe going a different direction at this particular age. So again, we believe that in conversions, we believe that there's opportunities to start creating a tax-free income. Hey, maybe not for you, maybe for your children, maybe for your grandchildren, but you're being given an opportunity here. Please don't waste that opportunity.
Little sidebar that kind of goes along with that. They've waived the pre-59 and a half this year. So I think that they need to take advantage of that in a certain situation. Definitely call us if you have qualified money and you've been waiting to 59 and a half to touch it. I've had a few clients that have called in and said, oh, does that mean I can take them out with no penalties? Well, it means that there's no 10% excise penalty for the pre-59 and a half. But if you have an annuity or some other system that has its own fees from within for taking it out early or too much, those will still exist. So don't get caught up by the miscommunication there. Check with somebody, hopefully us, and we can make sure that you get the right information on that.
Yeah, good point, Daniel. There's firms that just prepare your taxes. You bring your documents, your data in, they prepare your taxes, here you go, next. That's not how we do business. We're planners. We're looking at what kind of taxes are we going to have to pay next year. If you're a business, maybe now is the time to purchase some inventory. Maybe now is the time to look into depreciation. There's a lot of factors here, and if you're not using that information, and income taxes are the tail that wags the dog,
That's right.
then you're handicapped. You're handicapped in this economy. Now, the 59 and a half, pre-59 and a half, first of all, why is that rule there? Well, it's to keep you from looting, taking all your money out of your retirement account, buying a bass boat with it. Nothing wrong with bass boats, but buying a bass boat with it, and then basically being broke when you turn 60 or 65 and having to go on government assistance. But here's what's kind of morphed here. That rule has locked up your money. If you're below the age of 59 and a half, and certainly a lot of our clients are, your money's locked up. You have no way to access that money. Now, all of a sudden, out of the clear blue sky, you can access that money up to $100,000 of it. There's worlds of opportunity for creating tax-free income, for protecting your family, protecting your future, getting some guarantees. All these things are happening at the same time. And yet, if you're not, again, getting the right information, you can't make the right choices if you don't have choices. So now that your money's unlocked, let's start thinking about what that looks like, and let's start developing a plan to take full advantage of this, probably the only time in our lifetime, hopefully the only time in our lifetime, opportunity.
Awesome. Again, just want to remind you, if you're just joining us, that we're talking about the coronavirus CARES Act that was put out there as a stimulus to help us out, so we're going to try to help you out that. Now, going into some of our folks here have small businesses. Let's just touch lightly on how these small businesses are being affected by all this and what kind of relief they jumped out there for them. Okay,
so very important point. Again, I don't want to repeat myself, but all of this money doesn't exist. That I don't want to, again, I'm not being political here, I'm being mathematical here. You just need to be very careful that this money is not coming from a savings account somewhere. The government has one way, only one way, to create revenue, and that used to be called taxes, and that's what we specialize in. So there is $350 billion, again, in government-backed loans to help companies, but it's kind of a first come, first serve. So once again, if you're looking for paycheck protection, if you're looking for any of these programs, you might want to get a hold of us, get a hold of the forms, get on the website, get them filed, and try to get your fair share. Many of the small business people that we know and have as clients have worked hard all their lives. And this is an opportunity for them to get a little something back, a little advantage, a little something to help them. And we want to make sure that happens. So again, $350,000. Eligible companies are going to be borrowing basically 2.5 times a series of normal business expenses up to $10 million. Once again, warning, Will Robinson. this money, very likely, or a large percentage of it, will have to be paid back. Well, at 65, but again, interest rates are capped at 4%. A lot of people are saying, oh, well, they're just going to automatically turn that into a grant. They're not. There's no automatic anything because the money doesn't exist. So hopefully we get through this together and things are better quicker, and you just be careful because you may be paying this money back for a long time, and that's going to put a burden on your business. By the way, loans, interest, guess what? We're talking taxes again. Because, of course, interest payments on any kind of a loan, including an SBA loan, are income tax deductible. There is a new economic injury disaster program. Again, we don't think that's probably going to be enough money for the damages that we see and we think we're about to see, but the program's there. There was disaster relief added to pretty much all the programs we've had over the years, but now that we have occurrences of this virus in all 50 states, it's basically become a nationwide program, really for the first time ever. So again, you can apply online. You can pick up $10,000 very quickly. Again, not free money, but $10,000 to keep your business operating, keep your payrolls on, keep your people there, and keep everybody working.
Excellent, excellent. Also, a little bit on that is they did defer the employer payroll taxes, so you're not that you don't have to pay them. They're deferring when you have to pay them without penalty. So they're forgiving any penalties if you're not able to pay that out right now. Just to touch back on that pre-59.5 thing that we talked about a little bit earlier, that's accessing your qualified funds earlier. They did put some limitations on that. Is that correct?
That's correct. It's $100,000. And frankly, for most people in most income tax brackets, even though we have, by the way, taxes are on sale right now. I don't know if you've noticed or not. Again, not being political, but being mathematical, income taxes are at some of the lowest rates we've ever seen. Certainly long-term capital gains tax rates are unbelievable. The tax rate for long-term capital gains starts at zero. Zero, I'd be happy to pay all the zero taxes I could pay. So it is capped at $100,000, but let's talk about that. Let's say that you leave the $100,000 locked up in your plan, even though the IRS ostensibly has unlocked it. That $100,000 one day is going to be $200,000, $300,000, and you're going to be paying taxes. Now listen, you're going to be paying taxes on a larger amount of money at what we believe is a much higher tax bracket, much higher. Let's say we take the $100,000 out and we put it in a Roth. Of course, we have to pay our taxes, but we don't have to pay the pre-59.5. We have access to the money. Now, all of a sudden, that money, tax-free Roth, is worth the same $200,000, $300,000, $400,000 in the future, tax-free. It doesn't matter what the tax rates are going to be because you're not going to be paying any taxes. Think of how valuable that could be given this economy, this presidential election that's coming up in November, all these things that are swirling around us. Again, and I, at the risk of repeating myself, this is a one-time opportunity, and you better be taking advantage of it.
And that's great. A little sidebar to that is we do have a DVD that we'd like to show you that's called The Tax Train's Coming. It's an excellent DVD. If you don't think taxes are going up, you need to look at this DVD. We'll give it to you for free. Just contact our office and we'll be glad to give that out to you. Another big interest when we put out there was charitable giving. Everybody seems to be wondering what's this doing for charitable giving. I know we restricted it a lot over the last couple of tax changes that we had. But now they've kind of opened that gate a little bit. Is that true?
They really have. It's kind of unusual. Why would they do that, and what does this have to do with anything? It's because charities are a primary force in the United States economy of helping people, of creating. Look at Red Cross and some of the other charities out there that are feeding people and caring for people and creating hospitalization for them. So they want to push that. Now, here's something you need to know. If you make $100,000 a year and you give it to a charity, then you still have to pay taxes. The IRS has limitations. They figured that little program out. So there are limitations. Those have now, at least for 2020, been removed. For the first time ever, we have an above the line. Above the line means that if you give $300 to a charity, to a lawful charity, we can help you understand what lawful means. Some are, some aren't. To a lawful charity, you get to deduct that $300 off your income this year.
That's unbelievable.
That's never happened before. Again, if you feel charitable minded, if you want to get involved, if you want to help people in your community, this is the time to do it, and you get a nice tax deduction for it. Short of that, the normal 60% limitation on your charitable giving has been lifted. So there are no more requirements there. So if you're charitably minded and you've been thinking about that, one of the things we often do is we'll set up charitable foundations for our clients that really want to get involved in foreign ministry and supporting charities. There's a lot of things like that. Again, that's all planning. That's all planning. That has to be done before you come in to have your income taxes prepared.
So if I don't give to the charity, can I still go to heaven?
That's an interesting question that we'll be pursuing on another video. Thank you very much for tuning in.
All right. One of the last topics we're going to cover tonight, we're going to try to wrap this up for you, is the interest expense limitations that they put out there. You know, it changed the limitations and kind of backed it up a little bit. So how did that, summarize that a little bit for them?
So this is extremely complicated because it deals with what's called EBITDA, which is a particular way of accounting for businesses before their taxes get paid. So let's agree that it's very favorable that some of the limitations have gone from 30% up to 50%. If you have big mortgage loans, if you're dealing with large interest payments, and by the way, if you are, we need to talk to you anyways, but short of that, there are many benefits for small businesses that have substantial mortgage payments. Again, without getting into the weeds, they're great, they're beneficial, but all of these things, everything we've talked about tonight is time framed, very time framed. You can't pick up the phone and call us maybe in January next year and say, hey, I really want to get started with this, I want to get involved. It's too late, it'll be over. Even the extensions we're talking about. Listen, the clock is ticking. Not only in terms of your deferral for your tax filing, but your deferral for your tax payment, all that's going to come to an end, as well as this virus, by the way, as far as we're concerned. So we thank you again for your time. Thank you for your attention. Again, I'm sorry we didn't have more time to go through everything. We know this data. We even have a PDF, I believe, to send to you.
So kind of in summary, closing this up, again, we thank you for coming. We're excited that you were able to sit in and listen to some of this. We want you to feel free to comment. If you wanted to comment, we're going to go back and we'll give you some answers to those. But of course, the best way to contact us is through our website, which is thewehrlygroup.com. You can go there and there's a place for you to submit your information. We can contact you. You can certainly call our office. For that free report summary of what all we talked about tonight, if you'll go to pjwoffice.com/COVID-19 bill, you can, there's a link there and it'll download that for you for free. We're going to post that onto our Facebook page and our website after this, we finish up here tonight. Any last or partial things you want to say before we close this out, Patrick?
Well, I just want to make sure, please, I hope you can hear our hearts here and hear how we're passionate about this. Walking in to your income tax preparation office next year with your documents and without having contacted good tax planning, hired good tax planning, it's going to be too late. That's a mistake that you should not make. We're telling you that you're going to want to get involved now. Look at the choices now. Look at 4 or 5 different income tax returns that could be prepared, illustrating, walking out what this is going to look like in the new world that you're stepping into. The laws are going to change, and they're going to change, unfortunately, with you or without you. Please, take a few minutes, get in touch, and let's get this thing done correctly. Let's take advantage of something. Let's make lemonade out of some of the lemons that you've been thrown so far this year. Thank you again for your time. Daniel?
Thanks for coming. Y'all have a good evening. God bless. Bye-bye.